going to have some interesting discussions a little bit later about numbers and some of the things that are going on in the market at the moment. Now, if you guys would like to keep track of what we're doing here in Train and Trade or throughout DTI, make sure you join us at dtitrader.com/YouTube and dtitrader.com/Telegram. So, big event later on today is going to be the FOMC. And we'll see how things play out on that. A couple considerations to be made. And I know that if you have the opportunity to join Tom later on this evening for Wednesday on the web, you'll hear a lot about not just what we're expecting with the FOMC, but this is what the FOMC gave us. So this is the pre-session. At 1 o'clock, we'll be talking about the actual FOMC. That's 1 o'clock Central, 2 o'clock Eastern. And then later tonight, we get sort of a recap and how we move forward. So if you guys are ready for the fun, we'll get started, as I said, in about 10 minutes. I'm going to go a little bit mic quiet, but I'll probably come back and start talking to everybody in about 5 minutes' time. Actually, I just noticed, Adam, you already started the recording? All right. So we are recording. Might as well continue talking to you guys then. So how is everybody this morning? Let's go ahead and go around the room. I'm just going to take a quick look at what I'm looking at in terms of weather. I'm actually up in Birmingham today. 82 degrees. I'll be back in Mobile next week. But we got a few more days of staying up in Birmingham. And it's been beautiful weather up here. It's getting a little bit warmer. So I would imagine Adam might be able to fill in, or even Jonathan. Those Gulf Coast temperatures are probably still kind of hot. I like getting the cool evenings up here in Birmingham. Nice little wind coming through. Makes for a great trading day. And of course, today should be a great trading day because we do have the FOMC, Federal Open Market Committee. They'll be coming out a little bit later this afternoon. And it's not just the announcement. Everybody's kind of looking to that announcement, expecting a quarter-point rate cut. And I think that if you go to the CME FedWatch tool, that kind of backs up that expectation. What's really interesting today is the projection materials that will be released at the same time. And that's going to tell us a little bit about what the Fed expects to do going forward. Now, it should be pointed out that expectations change based on incoming information. So I think there are a lot of people out there who think, well, the Fed's not allowed to change their mind. Well, simple fact of the matter is they are. And what we're interested in traders is how does that change occur? So as we uh, go throughout the information, and probably tomorrow in Train and Trade, we'll compare projection materials from this session today to projection materials last quarter, and see how they differ, and talk a little bit about why they might differ, because there are obviously reasons that we change our view of what's going forward. In trading, you might come into a day thinking, I want to be bullish, and the market gives you that, but then if the market changes, you have an option. You can either change with the market or not. I think to disparage the idea of being flexible enough to change with the market, that might be a problem. And the same should be said of opinion pieces. Opinions do change as you go throughout based on incoming information. And so if you're unwilling to address that change, you kind of lock yourself into a corner. So that will be one of the things we discuss tomorrow. I hope you guys are able to make time to join us then. As far as today, we're going to discuss principles of fundamental understanding of numbers and what they are showing us. After all, it's hard to intake the information if you don't know how to read the information. So we'll get some of the information out there just in terms of basic understandings of markets and sort of how you can judge things moving forward. But there's always that fine line between I don't want to change anything about what I'm seeing versus I want to change every time the clock ticks 1 second further. There's a balance between the two, and we're going to give you a couple tools just in regards to numbers to understand that, and obviously there's a lot more information out there as well. So, for those of you logging in today, how's everybody doing? What are you guys up to? Where are you logging in from? Let's kind of get to know the crowd. We got Debbie from Kansas City. We got Frank in Sacramento. So we're coming in from a few different places. Looking to see who else wants to join us and tell us where you're logging in from. Give us a little clue as to the temperature in your neck of the woods. Lets me know who I'm talking to. And I'm actually going to take a look at the slides that Jonathan has prepared for us. He's been putting this together all morning. And we will get started with the official presentation in a bit. Yeah, as far as the rate cut stuff, I think some of that depends on what those projection materials look like. So we do expect that there is going to be maybe a significant change in our understanding of what's moving forward. I think that's one of the reasons we've seen these markets. It pains me to say that they're leveling out because they aren't leveling out. They're extremely bullish, but they're not pushing the highs at the moment. Let's see, we got Miles, good to see you. Salt Lake City, 55 degrees. Man, I would enjoy that so much right now. Phoenix, heading into the low 100s. Yeah, I would need a completely different set of attire to survive out in Phoenix, plus a lot of suntan. Connecticut at 64. Yeah, I like some of these temps that you guys are posting up. Now, Adam, I think you might be scaring him a little bit. He likes the hotter weather, which is why we keep him in the south. We don't tend to send him up north too often. Um, so great. I'm glad you guys are joining in. 78 in Dublin sounds perfect. That's right on the spot. It's not too cold, not too hot, just great. All right, so let's see. We are rolling into 10 o'clock. You guys ready to get started with this presentation? We may have some people who are coming in a little bit. I don't want to say late because they're on time, but Tom's a former Air Force pilot, and that military jargon, if you're on time, you're late. If you're 5 minutes early, you're on time. So we're going to go with that set, although I will kind of go to now. Let's go to the slides in about 5 seconds. So, Jonathan, let's go to the slides. Let's see what we got. We're going to kick things off, of course, with a little bit of a risk disclaimer here. And
Hey, Chuck. Yeah, thanks for kicking this thing off. Got a good session planned, and we are recording. We're on YouTube, so we're good to go.
all right. So, what do we got? You want to read this or should I?
Yeah, I'll start the session, and then we'll turn it over to you folks. This is going to be a real treat. And if you've never heard Chuck talk about key numbers, he's our key numbers expert and just brilliant in terms of key numbers. So you want to stick around today. And at the end, we'll stream a video, a very important video regarding Tom's T-Buzz rate cut playbook. That's the most important thing in your trading here for the foreseeable, not the foreseeable future, but immediate future with the rate cut coming today and the expectations of what we have ahead. You want to stay tuned in to what Tom's been thinking and what Tom's direction he'll go from here on out. Um, I don't have to repeat Tom's record in terms of his longer term calls, but he's quite good at his bigger picture thinking, of course, to go along with his short term trading. So let's get in. There's risk involved in trading, of course. There's past performance is not indicative of future results. And this is when Tom usually gives his opinion on the market. And if we look back at his T-Buzz TV today, his pivot was 66.75. Can anyone tell me where the S&P is trading? Of course, I know where it's trading, but let's get some active involvement here. And thanks, Chuck, for sharing the slides. 66.61. Tom's pivot is 66.75 today. We're trading at 66.71. If we go look at actually this chart here, 66.75 is exactly where traders sold the market off this morning off of this blue bar right here, which was reference bar 3. So Tom's pivot doing very well today, and we'll expect it to be a quiet morning as we wait on the Fed. So 66.75 is the pivot. And if Tom were here, he would say, I'm not considering buying this market until we at least get above my pivot. So keep that in mind as we go through the day. Now, Tom's got a retirement center education program. It's completely free to join. It's all inside Telegram, which I'll post a link here in a second. And you want to get joined in specifically in the Telegram channel since everything is taking place in the Telegram. We've got a session with Tom Friday afternoon at 2 p.m. Eastern Time. At 2 p.m. Eastern Time. Tom's got a list of stocks that he's purchased in his own retirement account. And that's pretty much been the focus of this education is how Tom plays his retirement account, sharing it with you. It's so if you want to be involved, of course, it's free. Once again, you can click that link in the chat. If you have any issues clicking the link in the chat, you can email me at row@DTI Trader. Speaking of emailing me, if you want to refer a link to Tasty Trade, one of Tom's favorite trading programs, platforms, you can email me for that as well. Now, next week, we do have a class. Tom and I are running an in-person class next week on Monday and Tuesday. I think we still have a seat available, and it's very last minute at this point. But if you're interested in making your travel plans last minute, meeting us down there in Ponte Vedra Beach, Florida, actually at Tom's clubhouse, the neighborhood where Tom lives. Very, very nice, called the Plantation down in Ponte Vedra. We'll be there Monday and Tuesday for a great event. That's in person. It's a great facility. There's about, I think it holds about 8 to 10 of us in a room. We have two big screens, one for the roadmap, one for the news. And it's education unlike really anything else you can get. Definitely better education than you can get online. We do a good job, I think, educating online, but there's nothing like face to face. And with an in-person event, you do get a free year of Tom's Futures First Education. That's our online education program through Telegram and through Monday night live sessions with Tom. You get to learn about the futures market and how Tom trades the futures. And Tom has this promise, and I believe in as well, we can teach you more in 2 days in a small class, face to face, than you can learn in a year online. There's just a certain level of students taking in the information that's different face to face than online. There's less distractions when you're face to face than if you're online. You probably multitasking, maybe just all kinds of distractions when you're online. But face to face, we can narrow down and focus on just the points that Tom wants to talk about and go through it until everyone in the room is up to speed and ready to move on. All right, on Monday after the close, we do issue the T-Buzz weekly trade letter. It's probably the best deal you can get here at DTI, besides Tom's free Telegram channel for retirement. This is only $9.99 a year, $9.99 a year. If you want the weekly trade letter, what's included is a broad market update from Tom this week focused on the Fed. Key news for the week, also focused on the Fed for the most part. Earnings season, when it's active, we'll let you know what the earnings for the week are. And then you get Tom's Magic 5 stocks. This functions somewhat similarly to the Magic 5 you post in TNT on a daily basis, except for the weekly letter focuses on Tom's 5 stocks for the week. So we still give you trigger numbers, support and resistance, so you can plan your targets and stops. And then finally, we get to the special opportunity of the week. And I'll just give you a note here. I believe this week was back to the well into the precious metals, so gold and silver. So that's the T-Buzz weekly trade letter. A lot of value for just $9.99. You can go to dtitrader.com/weekly if you want to get that right now, or if you just want to call and have any more questions about it, you can go to call 904-706-3532. The dates for the in-person class are, let me go back to that slide, September 22nd and 23rd. So that's next week. It's very last minute at this point if you're looking to join. But then we have another session in October. And I can go figure out when that is. I'm not, off the top of my head, I'm not sure when that is, Kelly, but I will figure that out and let you know in the chat here in just a moment. But we do have a session in October, maybe even 2 sessions in October. So that's when the next one is. So next week, very last minute at this point. And then plan ahead October 6th and 7th, Neil says. Okay, thanks, Neil. October 6th and 7th. So that's not too far away around either. We have 2 classes in October, the 6th and 7th, which is the Monday, Tuesday, and the 13th and 14th, which is the Monday, Tuesday. So that's unusual to have it back to back. So there you have it, October 6th and 7th, and then October 13th and 14th. So if you're interested in those upcoming sessions, maybe in October, one of the 2 sessions in October, you can post your name and your email in the chat today, and I'll get your info to Kelly Barber or Jeffrey Andraka so we can have one of them reach out to you. So again, if you're interested in one of those October classes, post your name and email in the chat, and we'll get in touch with you. Try to secure all the details. Get you down here to Florida. The cost of the classes, to be honest with you, Polly, I don't keep track of all that. But if you have any interest in all, like I said, post your name and email and we'll walk you through it. Kelly or Jeffrey will talk you through everything. All right, Chuck, we'll cover the September stocks here and then we'll turn it over to you, I believe. So September stocks, this is slide number 9 from the slide deck today. And I need to get this updated. Shouldn't take but a moment. While I'm doing this, crude oil futures has rolled from October out to November. So everyone probably rolled their index futures today, S&P, Dow, NASDAQ, or at least I hope you've done that by now. The S&P, Dow, and NASDAQ are on December, but crude oil has rolled out to November as well, in addition to that. This update is September 11th at 11:11 or 11:10. A lot of folks ask how they can save this spreadsheet to their browser. This is Google Chrome, the web browser that I'm sharing. At the top right of the browser, there's a star icon, which will bookmark. If I were to click that, that would bookmark the tab. And you can see across the top, I have a lot of bookmarks here. That's where it would be on your screen if you decide to bookmark it and save the spreadsheet for your later review. Again, every time I update this, it will update for you. And we usually update it every time we're live. Thanks, Kelly. Thanks, Jeff, for posting your info. I will get that over to the team, Kelly and Jeffrey, and they'll probably reach out to you today. All right, so what this sheet does, we look at the monthly open, and then we look at the first 3 days of the month. That's the first 3 trade days of every month. We mark the high and mark the low. That establishes a frame that we can trade from. Now, the way the frame works is if the price gets above the frame, the stock's trying to tell you it wants to go higher. Or when the price gets below the frame, it's telling you the opposite, it wants to go lower. This is a very critical, we call it the FTD algo, very critical process in our monthly process. And all these are long, majority are long, except for Berkshire, which has been short all month pretty much. All right. So when the S&P and NASDAQ are both long, that's a good sign for the bulls, and the majority of your stocks should also be showing strength, which is what we see here. Gold and silver are long, so your precious metal stocks should be showing strength. Bonds are long, so TLT should be long. And Bitcoin is long, so your crypto stocks should be showing strength. Anything that's not showing strength when what we'll call it, it's benchmark. So the S&P, majority of your stocks, gold, silver, all your precious metals stocks, Bitcoin, all your Bitcoin stocks. The futures, we'll say, are the benchmark. If you have any stocks that are not performing in the same direction, if they're not long on the spreadsheet or maybe they're even down for the month, right? Those are not healthy stocks, and you need to stay away at least until the next month when they might start to show some more strength. But this is a very easy way to find out what stocks are showing strength and what stocks are showing weakness. And of course, the stocks, if we're in a bull market like we are, stocks showing weakness, we just throw aside. Don't even worry about those. Focus on the stocks that are showing strength, the stocks that are acting healthy with and moving with the market. So as we scroll down here, like I mentioned, there's a lot of green. There's your dividend payers that Tom likes at the bottom. And of course, this is all good information to know. We've got a Fed meeting today, and we got an interest rate decision, and as Chuck was saying, we got some forward expectations that are probably the more important aspect of today's Fed event. So let's turn this over to Chuck in just a moment. Of course, we do this every day at 11 a.m. Eastern, Monday through Friday in September. Now, if Tom ever issues a trade, which he often does, we track it via the T-Buzz Talk and Trade program. And I'll post a link in case you want to get joined to that. It's not just trades from Train and Trade. I mean, it's all day long, Tom posting in his thoughts. He starts at 5 or so in the morning and posts his thoughts on the market, what he's trading. He can post it directly into the Telegram. So there's basically a direct to you, him posting all day long. And let me just show you real quick what Tom posted today inside TNT. He gave us a snapshot of the moneymaker, which is telling us that he framed this market today, or at least in the morning, of 67.05 down to 66.55. And then we've got all these stocks out here to the right. What the moneymaker feature does, it says it takes relative moves, how these stocks are trading relative to the benchmark, in this case, the S&P futures, and says, okay, in theory, given how these stocks have been trading against the S&P futures, if the S&P gets up to 67.05, where should these stocks be trading? Or if the S&P falls to 66.55, where should these stocks be trading? Now, the SPX, XSP, and SPY are obviously close to 100% correlated, so those are going to be very good numbers. Some of these others, if you have news that comes into the stock, it could, alter, show some divergence from these expectations. But the neat thing about this is, at least when it comes to the stocks that are not 100% correlated with the S&P, they're close, but not 100. If the S&P gets up to the level or just down to the level, you can find the stocks that are showing relative strength or weakness, all right, which can bring some trade opportunity. Tom also uses this to sell premium as well. For instance, if he expected 66.55 to be the low of the day and S&P not to go down below that, well, it offers up an opportunity to sell some premium below these levels, perhaps on the XSP below 659, for example. And if the low holds, then you should profit on that put spread. That's how we use this moneymaker. Tom also posts an update on the broad market. All right. He gives us magic 5 stocks. Today was Google, TLT, Reddit, TQQ, SPY. Notice there's pivot numbers there, trigger numbers. All right. So if these stocks get above those levels, Tom's going to be thinking about going long. Here's a Fed day pivot here. He updated his pivot. Earlier in the day, it was 75. He updated to 81. He gives you the high and low overnight. All right. Reminds you that when bonds are rising, that means yields are falling. There's an inverse relationship between bond prices and interest rates. Reminds you that the Fed is at 2 today. So the interest rate decision is at 2. Again, expecting a quarter-point rate cut. And then at 2:30 or so, the Fed Chair Jerome Powell will speak. And everyone will certainly be tuned in to what he has to say. He says gold and silver are correcting. Gives a pivot on GLD. Gives a pivot on silver futures. Then we get into some automated stuff right here. The 2-pass rule says there's nothing happening. If there was something happening, you'd see long on some of these or short on some of these. Chuck gives his reference bar information. Maybe he'll talk a little bit about today during the key numbers. There's Tom's T-Buzz TV, give it the trade daily rundown. And so you can see there's just all day long, tons and tons of information with T-Buzz Talk and Trade. Of course, there wasn't any trading this morning as we wait for the Fed, but you get the idea. You get the idea. Okay, Chuck, I'm going to turn it over to you. Looking forward to listening to you. Key numbers, part one.
All right. And I guess you're operating the slides, so we'll see how that works. Jonathan's usually pretty good about reading when I'm about to move to the next one. So we're going to talk a little bit about key numbers. So let's go to the next slide. Here we go. All right. So when we're looking at understanding numbers in market or really understanding anything in market, you always want to break things down to simple patterns. So patterns are a beginning understanding of numbers. There are two primary patterns in any number system, whether it's weights and measures, whether it's distance, whether it's numbers in the market, doesn't really matter. There are two primary ways of looking at things. Now, let me be clear. There are a lot of secondary, tertiary, and other ways of looking at things, but the two primary ways, you have the 10 base system and the fractional system. So let's look at those. Let's go ahead and pop up our next slide here, which I think is going to be the 10 base pattern. So in the 10 base pattern, um, I got to figure out a way to stop my phone from ringing. But in a 10 base pattern, our definitions focus on the number 10. So you'll see this with, for instance, the International System of Weights and Measures. It's a 10 base pattern. So the numbers of importance when we look at the market 10, 20, 30, 40, 50, 60, 70, 80, 90, 100. And by extension, we move that up 100, 200, 300, etc. And keep extending 1,000, 2,000, 3,000. So this is the way the 10 base pattern works. And it's very versatile and it can be applied just about anywhere. If I'm looking at a stock, like if we were to look at the SPY right now is at 659.49. What would I be expecting there? That 660 level is going to be kind of hard for the market to get past. We actually have a high today, 660.65. So what happens if they get 61? Maybe take that next step. And by the way, you can take that 10 base pattern down a level where your most important numbers are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Very easy, very simple, very basic, and very applicable across the board. So understand the 10 base pattern, how it affects markets, because it's going to affect the way we look at things after the FOMC and leading up to the FOMC. Let's go to our next pattern, which is the one that I find to be a little bit more fun. So on the next slide, we're going to look at the fractional pattern. Fractional pattern is contracted differently than the 10 base pattern. In any 100-point range, a fractional pattern finds the fractions of the area. So if we're looking at quarters, for instance, that's 25, 50, 75, 100. Why was Tom thinking about 66.75 as his pivot number from last night? Well, it's 3/4 of the way through the 6,600 area, so 75. And a lot of times when we're trading, like if you're talking about the S&P, you'll hear me, Jonathan, and even Tom drop that 66 at the start of the price and just say 75. That's our big number. Now, just like with the 10 base pattern, we can flip that, move it down, extend it, and instead of looking at quarters, we look at the next level down, which would be eighths. And that would be 12 and a half, 25 again, which is also a quarter, 37 and a half, 50, and so on. Now that can go even further when you get to 16ths. It can go even further when you get to something that might be applicable for bonds, 30 seconds. A lot of times when you look at a bond price right now, the 30-year bond December contract is trading at 118.01. It's 118 and 132nd. So if you're trying to take that into how you're going to manage, say, an option, understand that the bond market, typical bond, is $1,000 bond. So when we go, or 1 point would be $1,000, excuse me. When we go from 118 even to 118.01, that is a move of 1/32nd, which in $1,000 increment would be 31.25 or 0.3125. 0.03125 would be a 30-second. So basically, we're just breaking things down and learning how to do this neat little standard that everybody has to learn if you want to be a trader. You have to know how to divide by 2. So I'm going to ask the room right now, see how intelligent you guys are. I think everybody's going to get this one right. What is 100 divided by 2? All right, you got a few answers coming through. Great. All right, so I'm dealing with a relatively intelligent crowd. If you can figure that out, you can figure a lot about the market out. There's a lot of things that coincide. Let's go to our next slide because I think we've got this. When we look at both patterns, they both have extensive applications in markets. They also have some commonality. So a lot of times the 10-base traders will tell me, yeah, we divide by 2 too. See, we've got 50. Well, yeah, you got there a different way, but yes, 50 is a common point. 5 is a common point. So in any 10-point range, there's going to be a 5 number. So you end up with 75 between 70 and 80. That works. See how it plays out? So a lot of people, when they talk about numbers and they try and justify their pattern, they go back to that simple classic. What's 100 divided by 2? It's 50. So that's how you get there. Midpoints, things like that. If you know how to divide by 2, you already know enough to be, well, let me see how I phrase this. You already know enough to have a basic understanding of the market. And it's not that complicated of an idea, but it gets piled on with complications. So let's try and keep it simple. If you understand the simple mechanisms, then you can look through all that stuff that gets piled on later and just understand that basic principle. 100 divided by 2 equals 50. 50 is going to be a big number in any pattern that you look at, and 100 will be a big pattern in any number that you look at. And I don't care if you're talking about AMD trading at 159.36, NVIDIA at 170, Amazon at 230, or HPE at $24.77. Anybody want to guess what is going to be a big resistance number in HP that currently has a high at 24.92? Let me give you a hint. Take 50 and divide it by 2. See how much fun that is? All right, next slide. Let's see what we got. What are we moving into? After we look at those basic number patterns, we're then going to talk about pivot numbers. And the reason pivot numbers are important, we'll look at opens, for instance, we're taking time as an additional pattern. So you've got 10 base, you've got fractional, and then you've got time constructed pattern. And when we're looking at time, traders are going to break down time 1 year, 1 quarter, 1 month, 1 week, 1 day. And then when we get into the intraday, of course, things break down by hours and minutes. And the hours and minutes we think are important are reference bars. The DTI, we use the time pattern to identify reference bars. You'll notice we don't have any reference bar that starts at 12 minutes past the hour. There are no reference bars that start at 59 minutes past the hour. Everything starts on the hour or the half hour. So take an hour divided by 2. What do you get? Something 30. Again, it's that same concept, and it's not a difficult one. But this is the basic fundamental structure of understanding things. So we're going to break down things by reference bars when we look throughout the day. We had RB3 this morning. That's the first half hour of the U.S. cash market, that opening bell in New York, which is becoming less and less relevant. But it works out. Now, it sounds like a fib sequence. I get you, William. That's because the Fibonacci traders put as one of their hallmarks, divide by 2, right? It's a big thing in fib. It's actually not in fib, but it is used within is used by fib traders, and it is an absolute truth. Divide by two works across the board in any pattern you're looking at. All right, next up. Yeah, Jonathan just posted reference bars. If you want to reference the reference bars, go ahead and look through there. There's a white page on it. He does a great job of that. But let's go ahead and look at our next slide here because I think this becomes applicable to today. News pivot numbers. Some numbers take on a life of their own. They become event driven instead of pattern driven. But there are some economic events that fall into patterns. We have, in any given month, you have 5 major news events. And sometimes we get 6. And today we're going to get that bonus news event, which is the FOMC. It doesn't happen every month. Not even every other. It happens 8 times a year. So basically 2/3 of the months. So a lot of months have 6 major news events. So let's go ahead and look at the major news events and the pivot numbers that come with them. That'll be on our next slide here. 5 major news pivots. This is the any given month. You have the employment situation report, which will often break down and just call NFP, non-farm payroll, which is one of the reports in the employment situation report. Of course, most of you are probably looking at the employment rate or the unemployment rate, excuse me. There's also the participation rate, which I think is pretty big. They do average hourly work week, average hourly earnings. There's a lot of information that comes out in the employment situation reports. It's just sometimes easier to abbreviate it as NFP, especially when you look at the other reports here, core CPI, core PPI, GDP, and PCE. For those of you that don't know, CPI is the Consumer Price Index. PPI is the Producer Price Index. Those are inflationary gauges. GDP, Gross Domestic Product, that lets us know how the U.S. economy is growing, weakening, performing. That's what we're looking at. PCE is personal consumption expenditure. There is a PCE index, which is the Fed's preferred inflationary measure. Now, in some months like this one, we get that 6th pivot added. That's the FOMC. That's what we're going to get today. So we're going to pay careful attention to the market. We'll break it down by time because we know what time each of these news release happens. So at the time of the release of the FOMC announcement, and by the way, this time, each quarter, you'll have projection materials, and that's going to be a big thing. That's going to be the forward guidance. And then, of course, Jay Powell will have to come back later and explain those projection materials. So you get a nice little Q&A with the chair of the Fed, which everybody will interpret in their own special way, and we'll see how things turn out. Next slide, we're going to actually look at the numbers that we've seen so far in September. So these are the 6 pivots for September, one of the months that we do have 6. Next month, we'll only have 5. But NFP, earlier this month, that's usually the first report you get. The S&P futures at the time of the release of non-farm payroll or the employment situation reports were at 65.1450. For the PPI, the number was 65.41 quarter. This was one of those odd months where PPI got released the day before CPI. Usually it's the opposite. But that CPI pivot comes in a little bit higher at 65.55. Now, let me ask you to use your intelligence a little bit here. What is the progression from the start of the month to CPI? What direction is that moving? Higher, right? So, how do we judge the market? Each of those pivotal points could be moving in a certain direction. So that's what we're looking at. John, these are within the slide deck that got posted earlier. But yeah, Jonathan will post that up again. So it is part of the train and trade slides. So again, look at that progression. We get the next level of that progression coming out today. Currently, I've got the S&P futures trading at 66.5950. I'm willing to bet. I will throw this down, give you whatever odds you want. I will bet that the FOMC pivot number will be higher than the previous number, which was the CPI pivot number. Anybody want to take me up on that? Anybody think I'm wrong? Do you guys think that the market is going to be below 65.55? Or you could use the average of the pivot number, 6536.92. So you guys are saying higher. You think it's going to be higher? Look at that. We've got professional traders in the room. You can recognize when numbers are higher than what they have been. That's the job of a trader. So we got two things you got to figure out. What's higher, what's lower, right? And then you have to be able to divide by 2. How many of you in the room think you meet that criteria? The capability of dividing by 2 and recognizing when a number is higher than a previous one. I got a lot of hope for this room. I got a lot of optimism for you guys because these are common sense principles that, let's be honest, not everybody gets, and that's scary. We should all be able to understand that. So those are the 6 pivots. We're going to get the FOMC coming up, only with enough coffee. That's a good point. That is a good point, Mr. Kelly. Yeah, sometimes the mornings are a little rough, but with enough coffee, you can figure it out. How do we come up with each of these 6 pivot numbers? That is a great question, Amy. Amy asked that question. This is basically a time base. It's using the time pattern. So we know what time each of these pieces of information is released. And we look at where is the market trading. And again, these releases typically are on the hour or the half hour. We know what the price of the market was at the time of the release. So that's how I get that information. Are we meeting this afternoon? Neil, are you referring to with the Fed? Yeah, I will probably be there. For those of you that don't know, I've had a little scheduling glitch, but I do plan to be there at the time of the FOMC release. I'm not sure, Jonathan. What does Tom have planned this afternoon, or is his next big thing Wednesday on the web?
Yeah, Tom will be live tonight at 8. There's no afternoon session for the Fed. Just to be clear, there's no afternoon session for the Fed today, but you'll be live inside your trade room.
Right.
I know that. But there's no YouTube session this afternoon is what I'm trying to say. Now,
Gotcha.
to further answer the question about pivots, let's see. Amy, do you know what time that the Fed announces their interest rate decision today? Chuck was saying that the pivots come from a time-based whenever the event or news is released, like non-farm payrolls, NFP. On the slide here, non-farm payrolls, that happens at 8:30 a.m. Eastern time on the day that it's released. Same thing for PPI, same thing for CPI. Now the FOMC is when the interest rate decision is announced, and that's at 2 p.m. Eastern. And the rest of these are at 8:30. So all of these happen at 8:30 a.m. Eastern time on the day of the report, except for the FOMC, which is 2 p.m. Eastern and 11 a.m. Pacific for you. That's right. Yep, you're in California. Okay, perfect. Yep.
Right. And if you weren't there at the time of the release to see what the number was, the beautiful thing about it being released on those half hours is I could go back to the date where the CPI was released. It was last week on Thursday, and I could look at where the S&P futures were trading at that time. Or if I want to do a NASDAQ based pivot, I could look at where the NASDAQ was or the QQQ or whatever it is that you're using to establish those pivots. You can go back and pull up a chart and see on that half hour where the open was at the time of the release of the information. So that's how I get my pivots. I can go back and grab them historically. As long as there's intraday data, you can do that. And that's usually, well, you can get a 30-minute chart easily going out at least a year. So it's something that is easy to find once you know what to look for.
And then the next step, of course, and Chuck's already alluded to this, but how do you use that pivot? Well, keep it very, very simple. Same as Tom's daily pivot. If we're above that pivot number, the market is showing strength. If we're below it, the market's showing weakness. So it's a very simple process to follow. And you might notice Tom's methodology is focused on simple that works. And this is the pivot method. We use it every day. We use it every week, every month, every year.
Yeah. So what's our next slide here, Jonathan? I think we're getting towards the end.
Yeah, we are. And let me just say, David types in a good reminder. Tom won't be live this afternoon at 3 p.m., but there is a panel discussion where you can hear Roger Scott, Nate and Graham, Jeff Smith will be there, Kane will be there, and a few others as well. So there's like six or seven um, of our gurus at 3 p.m. Eastern today for a panel discussion. That's with over there at Prosperity Pub. So Tom won't be live, but you can tune in at 3 p.m. Eastern to hear those guys. Should be a great session over there. And then to hear Tom tonight at 8 p.m. Eastern Time, check your Telegram channels. 8 p.m. Eastern Time is the midweek market update. Tom will have, I'm sure, a lot to say tonight about the Fed, and we'll move on, go down the road in terms of what the Fed has to say. But speaking of what the Fed has to say, next week, Tom's hosting a T-Buzz rate cut playbook, 2 sessions. They're each going to be 2 hours in length, I believe, to cover what you can expect for the next 12 months from the rate cut cycle. Tom's expecting a rate cut cycle, so not just a quarter point cut. That's a very important deal. Interest rate hikes and cuts are very, very important to the market. So that's what we're doing here, the T-Buzz rate cut cycle playbook. 2 sessions next week. Again, both 2 hours in length. I believe it's on Wednesday, session 1, and Friday, session 2 of next week. Tom's also going to give you 10 stocks that he believes should outperform the market after a rate cut, during the rate cut cycle. 10 stocks at a minimum. He'll probably give you more than that even. Now, we have a video that explains in detail what all you're going to get with the T-Buzz rate cut playbook. Adam's already posted the link in the chat. So click on the link if you want to go ahead and get signed up for this. But let me play this video. And Chuck, a great session. I enjoyed it. Are you coming back for session 2 tomorrow, right, on key numbers?
Official half off.
Yeah, and we're going to take a little bit. I guess we're going to be able to look a little bit at that Fed, and we'll talk a little bit more about some of the more complicated things you can do with numbers tomorrow.
Okay, great. Yep, perfect. So I'm going to play this recording of Tom talking about his T-Buzz rate cut playbook, which again is next Wednesday and Friday. Thanks again for being here. We'll be live for Training and Trade tomorrow at, again, 11 a.m. Eastern. There is a panel discussion at 3 p.m. Eastern this afternoon with Roger, Nate, Graham, Jeff Smith, Kane, and a couple other folks as well. And then Tom will be live again tonight at 8 p.m. Eastern Time. So enjoy the rest of your day. Stay tuned into what the Fed has to say. We'll listen to this T-Buzz rate cut plan, then we'll close the room.
Importance of having an easing cycle in the stock market. Okay. I didn't think you did. And so I put together what I would call a class that would allow you to have a playbook, and it ought to really be helpful for those that want to lay out the next year. It's a critical week, and this happens this week. On Wednesday, everyone expects to see our first rate cut, either a quarter or a half, depending on what he does. Frank, I hadn't heard that in a long time, but I remember when I was growing up as a trader, so to speak, Marty Swag said, never fight the Fed. That's right. What is about to start is, has anybody ever done this, had a fire and thrown some gasoline on it? Anybody ever had a fire outside and take some gasoline and throw on it? I know we did it as kids. So we got a little smarter, but we did that. It really gets it going, doesn't it? That's exactly what the Fed easing cycle should do. Time to pay attention. We're getting close to October. By the way, you could take this one to the bank. In a year like this, year like this, you haven't seen anything yet October, November, and December quarter. That is the most fertile time period. So you got to make sure that you're locked in and have the right stocks to take advantage of. You have to pay attention. Rate cut cycles are wealth building opportunities. We plan to do that. But you got to know what to do. That's why our focus this week will shift to that. Many people make the mistake, think that when rates go down, everything goes up, but it's not true. You got to be very, very careful and know the criteria to look for. You got to know where to put your money. Some stocks and some assets will go up like a rocket ship. Other stocks in this kind of environment will not do well. And others will be like a poison pill in your account, which you don't want to have. A single rate cut can create new leaders and new losers pretty much overnight. And the cost of inaction, well, a picture's worth 1,000 words. Take a look at that chart. That's not what you want to see. Red line was the Fed fund rate dropping. Here's what happened the last time it was significantly cut. Bang. That's what you want to see. The markets will always struggle anytime they have tight money policy. Question is, where do we go next? What do we do? This rate cut cycle could be the best opportunity for you in years. We haven't had a rate cut cycle been raising rates, and finally we stalled, and now we start the best phase of it. Because see how it goes? You raise rates. Bond prices come down when that happens. Now, as you cut rates, okay, prices will rise. We'll help you prepare. I put together a rate cut playbook, the roadmap to trade and invest in a falling rate environment. This is pretty important right here, what I'm talking about, so pay attention. All the experience we have over the years watching the different cycles has given us an extreme edge when it comes to this changeover. And they bring the gasoline to the fire. You'll learn the ropes of trading rate cut cycles, time in, and how to take advantage of it after that announcement's made. Whether it's a quarter or a half doesn't matter. It's the fact that we started the cycle, okay? Let's take a look at what we'll cover. 10 stocks that will outperform after a rate cut. Knowing those 10 stocks, knowing what they've done in the past when this happens, the timing that they've done it, the sectors to lead, how to filter for strength and momentum, and building your own watch list out of this. Trading the Fedman, how to position before the announcement, what to watch during the press conference, and timing entries with discipline. Dividends. We've been talking a lot about dividends lately, why they matter more when rate cuts are falling. Because dividend strategies for stability and growth and compounding payouts in the bigger position. Everybody here ought to be very attuned to module number 3. Module number 4 is that 12-month playbook to be able to find what to do on a month-by-month rotational plan. In other words, when to press harder and when to back We'll do these classes in 2 sessions, 2 hours each. Now, I could charge the 500 standard rate for these, but I decided to cut our track record in education speaks for itself, doesn't it? If I do this, you get your money's worth. Just listen to these love letters from some of our top students over the years. Carol said, thank you. Education is the key. She is adverse to the stock market, and now she makes her living from it. Hello, Carol. Or Deb. I want every one of you to just understand the power of what's happening. If I tell you, like I did on July 21st, to pay attention, and I tell you, now's the time to get this plan in your back pocket. It's time to get the plan in your back pocket. Carlos, what a great student he has been, changed his life. Edwin, been with me for so many years, so many years. He's here tonight. Hello, Edwin. Learn it and take advantage of it. These cycles don't come off. They paid a lot of money over the years for education, and they keep coming back, and they're still here because they're getting money. Money. Now, we cut the price of this class to half of what we normally charge. For $199, your roadmap to trade and invest in a falling rate environment. Sign up tonight. Call 904-706-3532 if you got any questions. Folks, this has been put together in anticipation of what's about to happen. We've got the game plan. The playbook will be something you can use over the next year. And this is great. Thanks, Mike, for signing up. Didn't take you long to see a bargain and a half. The class dates, I don't know if we posted that in here, but it will be, I think, not this week, but next week.
Yeah, it's next Wednesday and Friday. You had said it.
Yeah, next Wednesday and Friday. Okay.
Oh,
You have the dates for that, Adam?
that would be the 24th and 26th.
24th and 26th. And get signed up. They've done a great job, the staff has, and I'm telling you, I think it's just a timely class. You know, I like to have these when they mean something. This means something. So be there, do it, and be part of it.
Hey, Bruce, you're good. So
yeah, we're gonna do it 12 to 2, right? Is that what we're planning each day? 12
Yep.
to 2. Noon to 2.
Bruce, you're good. Just
Yeah,
take a message.
12 to 2. Pretty good stuff. Folks, I gave you the 10 tickers. I'll be there tomorrow at 11 o'clock. Don't miss that class. Everything builds upon what's going to happen this week, and this class will be the actual game plan is there. Well, thank you, Charlie. Look what Charlie said. Yeah, we try to, you know, even though we're into each week the way we are at DTI, we've always thought ahead. And this is a prime example of thinking ahead and being ready for this time period. September 17th, we'll get the announcement, and that's when the fun starts with this kind of approach. That's why we're Always do well. We think ahead. Got to think ahead. All right. Any other questions about this week? ETH is a stock, Marge. It's one that I have traded. And if it gets above 45, it's time to get back in. Jimmy, I'll post a pivot in the morning at my standard time in TNT at 5 o'clock in the morning, after 5. And thanks everybody for joining TNT. I appreciate that. We finally got a bigger crowd in there, and I think people are starting to see the value of that. So I'll be working on the idea for the TQ Cube later, but boy, oh boy, you got to have a piece of that. The week open for the S&P is 66.45. 66.45 for the December S&P. 66.62 is the high that we went in the previous September equivalent. That gets you started there. Well, folks, that's funny, Charlie. That's funny. Oh, yeah. Yeah, take a look very hard at our 25 ticker list. Talk about dividends. You've got to have that as a piece of your portfolio, these dividends. Let's have a great week together. It starts as early as tomorrow. Tomorrow's Monday, but let's have a great week together. And don't miss Chuck's class on key numbers, Wednesday and Thursday. Of course, Joe, it has. Of course, you took it years ago, didn't you? There's an old line student that took Chuck's key number class. He's done an executive summary for Wednesday and Thursday for you this week. So that's all I got. Have a great night. I'll be back tomorrow morning. This starts the September 15th week, and you got to be happy.
And I'm gonna replay it for people that got late.
Yeah, why don't you do that? Thank you for coming. I'll see everybody tomorrow. Don't miss Train and Trade. Thanks, Al.